We have a gap up, big gap up. I'm trying to straighten out these windows here. Okay. For whatever reason, TradeStation deleted all my lines on the chart today, and I'm not sure why. Here's a 60-minute chart, 4-hour chart. I'll go back to the 5-minute chart, and I'll put some lines in. Excuse me. 60-minute chart, 4-hour chart. Back to the 5-minute chart. I think the single most important thing that is going on is what I said yesterday, and it's right here on the 60-minute chart. This is the last time the market touched the moving average, and this is now 9 or 10 days. Well, let me check on the daily chart. This is the touch. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. So this is about 70 bars on the 60-minute chart, not touching the moving average. Let me just check. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So today's the 10th, so that means there are 9 so far, and there are 7 60-minute bars to the day. So this is the 63rd bar where we have not touched the moving average. So 63 consecutive bars not touching the moving average. And I bring that up because that's a very unusual streak. And an unusual streak means it's probably not going to get much longer. And the streak will end by the low of a bar being 1 tick below the moving average. And we have not had that in 63 bars. And it's probably going to come soon. It's possible that it will come today, but that is pretty far down. But if not today, it probably will come in the next day or two, because this is really unusual to have that many bars without touching the moving average. If you just scroll back, even during strong trends, the market touches the moving average. All right, here's a long stretch. 1, 2, 3, 4, 5, 6, 7, 8, 9. So this is about as long as we have today. The first time it touches the moving average, bulls will buy it. However, that's the beginning of the end, typically, of the climax. And you can see we then went sideways for a week or two. So right now we're probably in this area, and we should get down to the moving average either today or on Tuesday. The market's closed on Monday. Bulls trying to accelerate up. You can call it a wedge. 1, 2, 3, 60-minute chart. And the daily chart has the same issue. What do you notice about this? Well, we're obviously going up, but something else you might notice is that this is 10 days, 11 days without going below the low of the prior bar. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So this is an 11-bar bull microchannel. So for 11 bars, all the lows have been at or above the low of the prior bar. And that is pretty extreme. I've been comparing this breakout to the April breakout. And I've been saying it's different from all these other breakouts where we go to a new high, pull back, 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 new high, pull back. I've been saying this is similar to April. And so far, it's very similar to April. Here, I don't know how many days in the microchannel, 2, 4, 7, 8, 9, 10, 11, 12, 13. So it looks like about 13 days in the microchannel here. And we have 11 here. We could go 15, we could go 20. We never have to have a pullback. We can go a million days without a pullback, but that's not how the market behaves. At some point, the bulls start to take profits. When they feel like their stop is too far below, they'll have to reduce their position size. And why would they do that? Because the firms all have risk managers paying attention to how much risk there is, and they don't want a trader to be long here. Doesn't matter if he bought here or if he bought here, but if you bought here, his stop technically is all the way down here, and that's a lot of risk. And the easiest way to reduce risk is to take some profits, and that's what that is. That's what that is. And we're at a similar situation right now, where we've gone up a long way, and no significant profit taking. We have a little bear day here, a little bear day here. That's minimal profit taking, but we should get enough to get a pullback. We should get enough so that the low of a bar goes below the low of the prior bar. And like I said, this is probably what will happen. The first time it happens, bulls will buy it. We'll go up a little bit more, and then we'll start to enter a trading range. And you can see after the April microchannel, we were sideways for well over a month. You could say we were sideways for a couple months all the way out here. But no top yet, and the first reversal down, traders will eagerly buy. They've been happy to buy above yesterday's low for 2 weeks, more than 2 weeks. When they finally get a chance to buy below yesterday's low, they'll take it. The bears are hoping that this is a failed breakout and started a trend down, but a big tail on the bottom of that bar, and that tells you that there was buying going into the close of that bar. So most traders are not going to sell below 1. And for the bulls, they can argue that we pulled back on 1, and therefore, if it goes above 1, the bull trend is resuming, but traders don't want to pay. They don't want to be buying above a big bear bar when it's that far above the average price. Here's the average price, the moving average. That's one average. And right now, this is how far we are above that average price. And if you're a bull, do you want to pay that far above average to buy a bear bar? No, if you're paying far above average, you want to be buying bars that look far above average. You want to be buying strong bull bars. You don't want to be buying bear bars. So the bulls need to see some bull bars before they buy. What happens if 2 is a bull bar, a bull inside bar closing on its high? Well, we're in a bull trend. We have a new high. We have a pullback. It would be a high 1 buy signal bar, but it's right after a bear bar. So we would have 2 bars, one being a good bull bar, but it's after a bear bar. And it's far above the average price. So 50% of the bars are bearish. And traders don't want to pay that much above average for something that's pretty bearish. Globex chart. We have a very big bar, the biggest bull bar in the past 100 bars. Often will attract profit takers. We got a little bit of profit taking after that big bull bar. And we had an II, a breakout, and a reversal. The bears are hoping that this is the start of a profit-taking sell-off, and that it will get us down to the Globex range. The bulls are hoping that this is a pullback in a bull trend, high 1 bull flag, and they want to get above the Globex high. As you know, 90% of days will either break above the Globex high or below the Globex low. And the bulls are hoping that this is a high 1 bull flag, and we go above the Globex high. They would like this to be a measuring gap. We sold off, we tested this high, we have a breakout. So they're hoping that this is a breakout test and that we go up. We're already around a measured move up. A breakout test and that we go up. We're already around a measured move up. So for the bulls, we have a bull trend, a reversal, and then a breakout above that bull trend. And now we're testing the breakout point. And the measured move target is just above the high of the day. So that's a target there. 90% chance we either go above the Globex high or below the Globex low at some point today. What do you do here? Well, it's not a very good sell with that big tail on the bottom of 1, and it's not a very good buy with a big bear bar. Most days have some kind of a trading range open, and that's especially true if you have a big gap. You know, the bulls want a bull trend from the open. They want it to go straight up from the first bar or from one of the first bars. And the bears want the opposite. They want it to sell off. But instead, the first bar closed almost exactly in the middle, almost exactly neutral. And the second bar is inside of the first bar, so again, neutral. What's most likely? Most likely we're going to go up a little bit because we're just below the Globex high. And we know 90% of the time we're either going to go above the Globex high or below the Globex low. We have a very strong rally and a pullback, and we're just below the Globex high. So chances are we're going above the Globex high. But if we get, this is the 15-minute Globex chart, if we get a bear bar closing on its low or a second bear bar, then this probably will remain the Globex high and will probably go down below the Globex low. If you have a strong trend and it reverses the first target, well, there are several. One is a breakout point, this high. Another is the bottom of the most recent buy climax, that low. And if we got down there, the next target would be the Globex low, and we probably would go below the Globex low. For the bears, micro double top, we gapped up and we sold off on 1. We went up on 2, and now we're selling off on 3. So it's a micro double top. And it's a buy climax. The gap up is a buy climax. But traders do not want to sell below a bull bar in a bull trend. So there are probably buyers not far below 2. But we have a tail on the top of 2, and we have a bear bar on 1. So most bulls are not going to be eager to buy above 2. If we have consecutive inside bars, breakout mode, you will get more traders willing to trade the breakout, buy above 3 or sell below 3. For the bears, they're hoping this is a failed breakout above yesterday's high. For gaps, I usually use magenta pink to highlight a gap. So this high is a magnet. Yesterday's high, yesterday's low are always magnets. And when you have a gap, I think they have a little bit more magnetic pull. Other magnets below moving average, yesterday's close, and then obviously the Globex low. But a bull bar and a gap up in a bull trend, probably bull scalpers buying the 2 low. You can see they buy the 2 low, they place a limit order to buy more lower, like 1 point lower, 2 points lower. And some of them get out break even on their first buy when it gets back to 1 tick above the 2 low. And then they get a profit on their lower buy. We have a micro double top 1 and 2. We have a micro double bottom 1 and 3. And we have the Globex high above. And as I said, it's more likely that we're going to go above the Globex high. And to do that, we have to go above the high of the day because the Globex high is up here. So chances are we're going to go higher. However, if we go sideways here and have bad signal bars, more traders will trade with limit orders than with stop orders. So instead of selling below 2, you have more traders buying below 2. Instead of buying above 3, there might be more traders selling above 3. Usually when you have a gap up and the market does not trend strongly in either direction, you end up with a trading range open. So that's what is likely here. Bulls trying to get the low of the day. They want to get as good a bull bar as they can on 3 for a possible low of the day. At a minimum, they want to get up to the Globex high. So it's a tricky buy. I think most traders should wait. Micro double bottom, gap up, Globex high, magnet above, all good. But a bear doji 3, a bear bar 1, tail 2, that's all neutral type of activity. And it's usually not good to pay far above average for something that looks pretty average. So gap up, good for the bulls. Bear bar, good for the bears. Bull bar, bear bar, bull bar. So it's fairly balanced. Most of the time, when you have a big gap up, you're going to get a trading range open. By trading range, I mean at least one leg up, one leg down. So here are 4 examples of a big gap up and trading range, some kind of a trading range open, at least a couple reversals. So reverse down, reverse up. Usually there's a double bottom and a double top. There's often a wedge bottom. The bulls want to buy, but they want to buy closer to the moving average. So they'd like to buy some kind of a double bottom near the moving average or trend up, or a wedge bottom and then a trend up. And the bears want to sell. And if it's a strong rally early on, they'll look for a wedge rally to sell, or they'll look for a double top to sell. So sideways here, sideways here, sideways, sideways to down here, sideways to up here. But it's still basically, these are all examples of trading range opens where you have at least 2 reversals after the first bar. So here's the first bar, reverse down, reverse up, trading range open. First bar, we reverse down, we reverse up, trading range open. You can see in limit order trading, traders selling above, buying below, and scalping. And most traders will not make money doing that. It's a very high percentage way to trade, so the probability is very high that you'll make money. And if you have high probability of making money after 10 trades, why are you not rich? And the reason is the reward, the size of your profit is small relative to what you have to risk. So even if you lose just a few times out of 10, your total losses will be greater than your total wins. So you could win 70% of the time. Let's say you have to risk 3 points to make 1 point, and you take the trade 10 times, and you win 70% of the time. So 7 out of 10 trades, you make 1 point, so you made 7 points. But 3 out of 10 times, you lost 3 points, so you lost 9 points. So you won 70% of the time, but you ended up with a net loss of 2 points. Also, you've taken 10 trades, that's a lot of work. You want to be paid. You don't want to end up losing money. Trying to get up to the Globex high. This is a pretty good bar. It increases the chances that this is going to get us there. But will we get far above it? Will today be a big bull trend day? It might be. I've been saying for the past couple of weeks that we're going up. I said that we may go up 4,400, 4,500 before this ends. This is the end of that window of seasonal bullishness. And for the past several weeks, I've been saying the market tends to rally into the end of any quarter, and that's especially true for the end of June. I don't know why that is, but I studied a whole bunch of calendar trades 20 years ago, 15 years ago, and I have a lot of data on it. And one of the most reliable periods of bullishness is from June 26th to July 5th. And we're right at the end of that window. Could it keep going up? Of course. Does it have to go up at all? Could it go down during that window? Yeah. But there's a high probability that it will go up in that window. And I checked other dates, July 25th, June 25th, June 24th, June 27th. And the single best cluster of days was June 26th to July 5th. So, is this buy the close? Yeah, we should go higher. It's a bull surprise bar, and we have a magnet above. But will we go a lot higher? Is this going to be the start of a big bull trend? I think not. We have a reversal bar, bar 3. It went down, it went up, it closed above the midpoint, so it's a reversal bar, but it had a bear body, so that's not very bullish. Plus, in the first 4 bars, we had 2 bear bars and only 1 strong bull bar. Bar 2 is a bull bar, but a tail on the top. So this is not all that bullish. It could become bullish if the bulls get consecutive big bull bars closing on their highs. That would increase the chances that today could be a huge bull trend day. Remember last week I said that it was possible that the market could reach 4,400 before the 4th of July. Right now that's not going to happen. That's 80 points above where we are. But we still could go up. We still could go up more. I do think the 10 or 11 bar bull microchannel is a problem. It's similar to this. I've been comparing this to this for a couple of weeks now. But I also think this is probably what the next few weeks will look like. It might go up a little higher. Instead of this, we could go down a little lower. But I think we're going to be sideways to down. You'll hear the term consolidating the gains. Bulls taking profits and looking to buy pullbacks. So they take some profits, it goes down, they buy more, but they're switching to scalp mode. It goes up, they take profits, bears sell, betting on more and more reversals. So the bears start to become more confident as they see other bears making money, selling new highs, and bulls become more cautious as they see the new highs reversing down. So the bulls buy low and they take profits high. The bears sell high and they take profits low. And the result is a trading range. And that usually follows a trend. In this case, the bull trend. Now, for the bears, we try to reverse down below 2. So for the bears, they're hoping this is a failed breakout above yesterday's high. We tried to reverse down below 2. They're trying to reverse down a second time below 5. And often, a low 2 top like that will result in a bear trend, and this ends up as the high of the day. But there are 2 problems with it. First, it's a doji bar. There are 3 problems with it. First, it's a doji bar, so it's a low probability sell. Second, 4 is a surprisingly big bar, a bull surprise bar. And a bull surprise bar typically will have at least a small second leg up, and therefore there are probably buyers below 5. And then finally, I've been saying we should get above the Globex high, which is a little bit higher. However, this could end up as a parabolic wedge type of rally. 1 pullback, 2 pullback, 3. Even though the pullback here is below 1, it still could be 3 highs and a parabolic wedge. Sometimes the count will start over again with a bull surprise bar, so it could be 1 pullback, 2 pullback, 3. Yesterday we had that kind of a thing where is it a wedge or not a wedge? 1, 2, 3. Is it 1, 2, and 3? And here we broke above it and then went down. I'm going to turn the screen off for a minute because one of my, this is not the screen that I normally use, and I'm wondering if I open the wrong file. Screen that I normally use, and I'm wondering if I open the wrong file. I'm looking at all the possible files that I have. I'm looking at all the possible files that I have. Let me try opening this one. Okay, that looks more like it. So I'm going to close this one. And I'm going to rename this one. And then I'll turn the screen back on. So hopefully this is back to my usual screen. Now we draw this line in. And I'll make it magenta for a gap up. I was saying, here's a 60-minute chart. I was saying that I lost all my drawing stuff, the text and the lines and everything. And that's always a concern. And now I'm going to juggle this around. This is a 60-minute chart. Now let me go to a 15-minute chart. And now this is important. Yesterday's open. It's important. It's really an important price. Not necessarily today, but 30 days from now, it'll be an important price. Will July be a 6th consecutive bull bar on the monthly chart? Or will July have a bear body? Or to have a bear body, that means July 31st has to close below this line. So this line could be important at the end of the month. Back to a 5-minute chart here. By the way, I don't know if you noticed, yesterday gapped up on the monthly chart by 1 tick. This is the high of June, and this is the open of July. It gapped up by 1 tick and immediately closed. So we had a gap on the monthly chart that immediately closed in the first few seconds of the day. Okay, so now the bears are hoping that this is going to be a reversal down. It's not quite an II. I'm going to draw in the Globex high lines. Still room to the Globex high. And we know that we are either going above the Globex high or below the Globex low. And which do you think is more likely? Going above that line or below this line? Well, we're much closer to that line, and we have a bull surprise. Chances are we're going above the Globex high. But if we start to reverse down, especially if we get a big bear bar reversing this bar, then we'll probably go below the Globex low instead of above the Globex high. But right now, it's more likely we're going up. And 5-minute chart, we have a bull surprise bar here. We should get a second leg up. So not a lot of traders selling below 6, even though it's a low 2 and a failed breakout yesterday's high. Bull's trying to get a high 1, trying to get up to the Globex high. And as I said, we don't have to stop there. But look at today. We've had 6 bars. This is the 7th bar. And so 7 bars today. How many of them are strongly bullish? 1, bar 4. And the other bars are neutral or bearish. So the first 6 bars, 4 are bear bars. So do you think that's far above average bullishness? Do you really want to be paying far above the average price when 4 of 6 bars have bear bodies? So it's a problem. So it looks like this rally is probably going to be simply a test of the Globex high. Go a little bit above it and try to reverse down. My question, I talked about a parabolic wedge. We have 1 high, 2 highs. Will we simply get a second leg up from this and then a third high and reversal down? Or is this starting the count over again? Is this a spike pullback, second leg pullback, third leg? So I don't know at this point if we just get 1 more little new high and then a reversal, or 2 more legs up and then a reversal. But unless we start to get consecutive big bull bars closing on their highs, chances are we're going to get a reversal. Can it still continue up in a small pullback bull trend day? It's not likely. Of the first 8 bars, only 1 strong trend bar. 7 bars have trading range characteristics: tails, reversals, bear, bull, bear, and dojis, right? So the market is still undecided and still balanced. For the bears, it's an IOI, so it's a low 2-8, low 2-6, a bigger low 2 with 2 and 6, and this would be a second sell. But we saw the magnet above, and so far 8 is not a strong sell signal bar. What happens if 9 is a second consecutive inside bar, so that we have an II, 8 and 9 consecutive inside bars, and with 9 closing on its low? You'll start to get some bears willing to sell, taking a chance that will reverse down. But okay, so we're not going to get that. We're not going to get an we're not going to get an II. Right now we have an IOI, a low 2, 8 and 6, a low 2, 6 and 2, but not bearish. Where are bear bars closing on their lows? And we still have the Globex high as a magnet above. As I said, even though it's more likely that we're going to go above the Globex high, and here's the 15-minute Globex chart. If we start to get bear bars, especially if we get a big bear bar reversing much of that, then instead of going above the Globex high, we'll probably go below the Globex low. Here we had a big bull bar and a reversal. Here a big bull bar. Do not have a reversal yet, but if we do get a big reversal, then this will probably remain the high of the day. We have a low 2 top, 2 and 6, and theoretically we're still on the sell below 6. I think most traders should not take that sell. They should be flat. I would say half the time, a low 2 top fails to create a reversal. A low 2 top on the open, half the time there will be buyers below and will continue up. And when the sell signal bar